All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, sometime in late October, as we're getting ready for the final week of October coming up, Halloween this weekend. We've got earnings, mostly earnings misses, but despite all the recent earnings misses and really high inflation, markets have still inexplicably been going up. So we trade what we see, not what we think. I was trading long SOXL lately. I don't know if anyone else is trading that, but really good breakout to the upside. So market forecast, what's going on? We're at resistance. Would not surprise me to see the market head back down Monday or Tuesday. We did break above that previous 38.50 right there. So we're up maybe 40 handles. So we have a Gravestone Doji / shooting star here. We did break that though. So still long until the market tells us otherwise. But I'm going to use the valuable tip of the day. One of them is use 38.50, not way down at 3800. I'm going to use 38.50 as S1. That's just the reason is that was the Tuesday high and the previous pattern right here low. So we did break above resistance. So now previous support, maybe new resistance on the way down. So what I'm saying is, let's go ahead and tentatively look at long swing trades, small share size, if the market continues up Monday, Tuesday. Favorite sectors include energy, healthcare, solar, and oil, and quite a few others, but we'll look at those, and Bitcoin too. And also a lot of the beaten down things, like Apple did a really wonderful day yesterday. I missed Apple, unfortunately. I was trying to trade Meta. I was hoping Facebook would do a bounce, but instead Apple got all the love. Both are worth watching next week, Apple and Facebook, as well as the other beaten down tech like Baba and Microsoft and others that have been sold off that may fill the gap. So anyway, 3,800 support, and let's just arbitrarily use 39.50 as resistance. The other thing I want us to pay attention to now, of course, is the VIX. So before we do that, let me be really clear on what I'm trying to say here. That wasn't clear, sorry. It's been a long week, but a busy one. I have so many new customers, so thanks to all of you new people who joined. Good to see you guys in the room. Anyway, the point is we want to cautiously swing. We day trade regardless, but for swing traders, cautious, small share size. For me, I usually start under $1,000 worth of the underlying. So 30 shares of a $30 stock, 50 shares of a $20 stock, 100 shares of a $10 stock or whatnot. So under $1,000 of starting capital to plant a few seeds. And if they go up over the days ahead, then I martingale in, I scale in. Anyway, so my point is small share swing trades, if the market keeps going up Monday, Tuesday, is fine because the market's in a nice recovery mode. And we have, 5 out of 6 recent candles were reasonably healthy green. So, well, thanks, Paul, appreciate it. Let's see. Yeah, the trader is asking about UDOW. Yeah, we were covering UDOW for members. I didn't trade that one yesterday, but one of my members gave us a good smart call for it. I said to go long at 55.60. We'll look at that. One thing I'm going to start doing, let me ask you, I'm very, very busy and lots of things to do, but I think it would be helpful to keep track of the wins versus stops each day in the live room. So, for example, yesterday you can see we had, of the official calls we had that triggered, we had 3, 4, 6 wins and 2 stops. That's what I'm over here. This is the entries that I posted ahead of time. They're my calls and how they worked out. If they ran at least 30 cents to 40 cents and up. So the ones that worked out, I put the word win next to, and the ones that didn't work out, I put the word stop next to. Would that help if I do like a daily recap video of both the wins and the stops? So you get for transparency, so you guys can see how my alerts did and how my traders too. So many smart traders. A lot of times the best trades today come from you folks, my traders. We got a lot of eyes and ears out there on the market. So would that help? Like a daily brief 5-minute or so recap video of this is what happened in the markets. These are the charts that worked out for us, and these are ones that took stops. I think that might help. So, wow, okay. A lot of yeses, absolutely. Yes, yes, yep, that helps. Yes. Way to go. Sounds good. Smart. Yes. Okay. Thanks. It's scrolling by. I will do that because I've been remiss and I guess to assume makes an asset of you and me, right? So I kind of assumed you guys knew my win rate is, really good. But I can't make that assumption because a lot of you are new to working with me or just peripherally aware of me. So I will start posting, with proof the wins versus stops in the room each day in a kind of brief video at the end of the day. So something to look forward to. Anyway, so trading strategy for next week, small size swing. Day trade is great. We do all day trades. But for swing traders, small size longs if the market continues up over the 3,900. If the market, however, this is the rider downer. Write that down with your Mont Blanc pen there, baby. Boom. My name on it. Anyway, if, however, the market gets under 38.50, we want to start working slowly into inverses because they're really cheap here, like SQQQ and SOXS. I was trying to trade those into the close yesterday, but they didn't bounce much. UVXY did a little bit, but not blow my hair back. If the market gets under 38.50 and especially under 3,800, we want to start swing trading as well as intraday trading inverses like the SQQQ and UVXY and TZA and the like. All right, so that's okay. Now let's take a look at the VIX. By the way, do you guys have any charts you want me to pull up? Go ahead and hit me with them. I got a lot of you here. Wow, another big, it's like record breaking the last 2 years or so, a big number. So hundreds of you here, a big ass turnout. I hope you guys can all fit. Anyway, this is the VIX. The VIX has been going down, obviously. The VIX is overdue for a bounce any second now, right? So the VIX, remember I said 28 was the signal to start going long the market. It's VIX. Remember last week? I drew the line there and I said if we get under 28 in the VIX, the equities market will be going up. And so that's our signal was 28. And I'm using see if we're down in here. So lost support. I went down. So we're bullish bias until. So the number one takeaway is we don't want to go long inverses and or short the market, whether that's buying index puts or buying puts on whatever you trade, or going in inverses unless the VIX cycles back up over the 28. So that's the line in the sand is 28. Remember I said that. It's how many winning trades you make. 28. If the VIX gets back over 28, we want to then start trading, swing trading as well as day trading inverses, and we want to get out of equities or scale out of stocks at 2-day lows. How many of you have read my 100 articles in stocks and commodities, or the many I posted on equities.com or elsewhere? I like a 2-day basis. So if the market loses 2-day support, I sell at least half and sell the rest slightly underneath that. If the market breaks a 2-day high, I scale in and keeps going up, I'll scale from there. So 2-day support resistance helps. On this chart, we want to start going inverse or short the market only if VIX gets over 28. So remember that tip alone is very actionable. Just write that on a notepad or just a notepad file. If VIX, as long as VIX stays under 28, we have a long bias. But if the VIX gets over 28, we have a short bias / go to cash, tighten up trailing stops on open equity positions. And for example, let's flip to day trading. I'm just curious, wow, all of you here, how many of you are day traders? How many of you are swing traders? How many of you are both? If you would type where you're from, what city, state, or country you're from, and if you're a day, type in where you're from and the letter D or S or B to indicate day trader, swing trader, both. What do we got? Yeah, good point, Angie. Let's see, wow. We got Florida, B, CB, Milwaukee, Cleveland, Atlanta in the house, Hotlanta, New York, both. Swing, both. Summerville, South Carolina, Chichester, Canadian A, Princeton, Palm Beach Gardens, Florida, St. Louis, Fresno, Oakland. Mostly Americans and Canadians, Palm Springs, Canada, Oakland. A lot of you do both. That's what I've been finding over the many years is maybe 70% of you do both, and the remaining kind of split between day and swings only. Palm Springs, Canada, Corpus Christi. I like Texas, and I like people from Texas. I'm up here in Colorado. We're cousins, right? Colorado and Texas. But Texas is getting crowded like California. Anyway, Amazon did a nice pivot. I called along at 98.7 for my members. So here's some of the wins, for example, from yesterday. Panduoduo, PDD, the ticker is in Papa Delta Delta. I called along before it ran up, like before. I always post alerts before 9:30. Long, starting at 8:30, I post alerts for where to go long things, so that you can pick and choose and develop your own personal trading plan based on which charts you like. So before the market opened, I said we go long PDD at 50.7, ran nicely. Now I missed Apple to my detriment. Apple was the one that got away yesterday. I regret not trading Apple. I personally, I don't trade usually things over $50 or so a share, much less 150. But Apple would have been a good runner. RJF was good. I called it at 119. It ran to the 120. LIN. Surprising that's Metastock. Does anyone have any clues or hazard a guess as to why Meta, which is a dumb name, Facebook, just went sideways yesterday? I would have thought it would have either sold down and pivoted, which would have been fine, or closed the gap and went up. But instead, Facebook, nobody cared. It just went sideways all day. I have no idea. Good point, Nancy. Bargain price, yeah. Yeah, I think if you're an investor, and now is a great time to buy some of the beat down large cap techs, like Facebook, like Apple. Apple better, of course. Apple's kind of the blue chip. So if you're a long-term trader and investor, now might be a good time to start nibbling at large cap. And I don't really mind the FANGs because they, despite their overvaluation, a lot of the wind's been taken out of the sales and they're starting to pivot. We might get I don't know if we get a mean reversion pivot, but we might get 30%, if not that 50. So yeah, it's a bargain price. I think basically Facebook anywhere over 100 is a buy with a hard stop at 95. So that would be my official call. Remember I said this, I was using 102. So that's my story and I'll stick with it. Not a trade recommendation, but for longer term investors, you might want to buy Meta if it gets over 102 with a hard stop down at the 95. So yeah, I'd give it to full 7. You have to give this some points to spread. 102 on the long and a 95 trailing or hard stop on that. Soxel was a monster yesterday, right? Now I called the long for my members at 8:45. And again, over here is like what I used to call an answer key, and I used to have a separate answer key document, but to give us more space for charts, I consolidated. So anyway, the SOXL, I called the long before the market opened at 8:45. I said go long at 8:45, and again at 9.08. I like to go long right above whole numbers. That's why the trigger is 908 was the second. So I gave them not one but 2 winning alerts in SOXL yesterday. One of my traders mentioned you down. That's not something I trade myself, but I wish I had yesterday, right? Ran up, my call on it was to go long at 55.6. So kind of late to the long party, because he mentioned it back when it was here and I said, yeah, take a shot at 55.6. It ran up $1, so that's pretty good. Now, I called the long for an early breakout that did not work out up at, say, 24.30. Well, it ran up, but then it pulled back. So you should have been able to get out at least at scratch. 24.30 ran up to 24.70 and back. But that was my long call, and that didn't keep going up. And also call the SQs 54.6. I think I bought the top there. It started to, at the time it looked like a nice drop that's going to pivot, and it started to, but then after the bounce, it went back down. So I had a couple of stops, so mostly win, so that's good. Okay, now let's get back to our daily chart and see what you guys have. Hit me with your best shot. What do you guys have? We'll look at some of the other charts here in a moment. So give me swing trading charts. Give me your swing trading charts. Yeah, that's a great chart. Extra, whatever that is, EXTR. It's a beautiful chart. I love that chart. I'll probably trade that over 18 if it holds. Good point. Afshin's asking, what do you think about the election effect on November 8th? I think the market drops and crashes for a few months after that. Well, it depends on who gets in. But if the political party that favors small government and low taxes, and has a brain. If we flip it red, I shouldn't say that. Anyway, well, that's how I feel. If us Republicans take the House and the Senate, whatever, then we may well see a continuation rally. But if for any reason it's a split, or if we lose, I think we will see a epic sell-off. So it'll be interesting to trade after the election. The other thing too, FOMC is coming up next week, so that's another market moving event. So let's see, RXDX. Oh wow, a lot of these. Let's see. RX. I'm just going to type these in so I don't forget them for you guys. Again, I'm not giving trading advice, but I'm telling you how I'd be happy to tell you. First of all, if the chart's worth trading, and for those who've been following, you know how well my calls are, right? The charts that I say are worth trading generally do really well, and the ones that aren't. So Schwab. You guys give me your tickers and we'll take a look at these in just a second here. And if I missed it, please type it again. I got so many scrolling by here. And again, if I missed your question, I apologize. A really epic turnout. A lot of people and the things scrolling by, so I'm trying to keep an eye on this. Let's see, STLA. Wow, a lot of these. Okay. But that's fine. Hit me with them. I'm here to help. Thanks for all the tickers. Well, we got like a dozen so far. All right, we will take a look at those in just a second. Hey, it would be remiss if I did not remind you, two things coming up. One is cheap and one's more pricey. If you want to join me in the live room, and I urge you all to do this, it's only $97 for a month. This particular offer does not auto subscribe. It's just a one-time $97 charge, and you get access to the live month throughout November. And if for any reason you're not happy, you can ask for your money back, and I'd be happy to do that. So far, nobody's asked for the money back, so that's good. Knock on wood. Knock on wood. My calls tend to be pretty good, and all it takes is a couple to do really well for you. So anyway, that's at trademastery.com, gold ticket. Let me see. Excuse me while I type this in. Kind of hot and pack here. Okay, so that link is in your chat box, so you can just click on that. Just look at it later. But basically, you got to work with me for the entire month. I show up at 8:30 in the morning and I stay till 11, and then I come back at 3:30 or so, or earlier. And I also show up for every single FOMC or other midday press release or anything like that. So a lot of coverage. So you get a lot of training. It's only $97, and you get specific alerts, very honest training, and entries and exits. So I'm not going to go through this page. Taking a page from Willy Wonka and the Chocolate Factory. How many of you like the movie? I like the original Willy Wonka with Gene. I want to say Gene. Anyway. Anyway, get your golden ticket for my live room. Just $97. No chocolate included, though. Sadly, no chocolate included. No keys to the factory. And you got to behave yourselves. But anyway, it's you get this $97, and you got a triple guarantee. Even a year later, I'll give you your $97 back. I don't care. I'm rich. So anyway, it's a 30-day money back guarantee, support and help guaranteed, and 365 days. So if you take it for the month and next September you say, for some reason, I don't want it. I want my $97 back, I'd be happy to give it to you. So anyway, good honest training, good guarantee. And oh, by the way, I got an intro video about it. There's a So here's like a sample of the first 15 minutes from a few months ago. I'll put more current videos and then some how-to videos to And of course, I'm a real money trader with tax return proof. Unlike the vast majority of my competitors, why do you guys think that most trading educators fail to meet my standard and fail to post 1099 proof that they actually trade? God's honest truth is that most of the trading educators are bullshitters. They don't even freaking trade. You guys, I can guarantee, well, I guarantee that I'm 99.999% sure that each of you, if you do more than 5 trades a month, trade far more than your favorite educator that you see on PowerPoint and YouTube videos and all that kind of bullshit. They're internet marketers. I would absolutely require that anybody you want to learn trading from must show proof they really trade a live account with a tax return statement, at least a 1099, if not the 5989 or whatever it is. At least make them show a copy of their 1099 to prove that they're really traders. Most of the educators in the industry are full of shit and they do not even trade. This reviewer Emmett said I was one of only 5 educators he could find in the entire world that had proof they even had a profitable year, which I do, quite a few in fact. So make sure that before you risk, again, how to say, learning from somebody just because they have a slick website or they sound good on a webinar does not make them a real trader. Make sure that they can, and on demand, show proof of recent real trades they did. I mean, I took screen caps of some of yesterday's trades. So any day you can ask me, happy to show you my Fidelity account. Anyway, it's my heartfelt belief and admonition that you should only learn from people who at least prove they trade. With some, they don't have to do as much as I did. 41 million order flow is a lot, more than probably all my I'm sure it's all my competitors put together. But make sure that you insist that anyone you learn trading from must furnish a 1099 with their 10 or their social security number redacted for security, but make sure that they can show proof that they really trade. And again, broker statements can be made up and fabricated and can be on a demo account. So the only thing that shows that they're a real trader is United States tax return proof. Let's see. Oh, thanks. I appreciate it. Wow, a lot of you. William's asking how to avoid the wash sale rules. Best I could figure it out, and it worked out. This is I don't trade in January. For the entire month of January, I do not trade anything that I traded or that's substantially similar in December. So that's the best I could find. For more on taxes, be sure to consult with my colleague Bob Green at greentradertax.com. He's got a really good blog post, and he's the best guy for Trader Tax. I've hired him in the past. I hired him when the IRS changed their wash sale requirements a few years ago, because remember they announced it in November. We got to get our taxes done immediately. So anyway, I don't trade in January anything that I traded in the previous 30 days in December. So I have to wait till February 1 to start trading anything that I traded in December. And that's how I avoid the wash. But that's not tax advice. So make sure you talk with the tax advisor. Anyway, my point is, make sure that you learn from people that actually really trade with proof. The other thing, and we're going to get back to our charts in just a minute, I changed the name from Premium Profits because people are confusing options, premium, and all that kind of stuff. So to Action Profits Coaching Program. And that is, we've taken a lot of the new, applications. I've got quite a few dozen. I had to decline, I think it was 4 now, because the people either were too new to trading or they were Forex or e-mini traders or whatnot. So, but this is coming up. Really excited. This is the first major coaching program I've offered in over 5 years. So I'm not going to go into a lot of detail. I put a ton of work into the site, and I still have yet to create the talking head videos for it. But I'll probably do a couple of webinars to bring you up to speed on what's covered. We've got a whole year of training and a lot of one-on-one with me going over your trades. I will review your trades, up to 30 of them, or more even, and tell you what you could have done differently, what I saw that would have been a red flag that you might not have seen, and that can really help you significantly. And I've never offered that level of support before because I'm fucking busy. But for the price is right, this is pricey, it's up at 10 to 25K. I'll make the time. So you can buy my time, and I will review your trades. And we've got, every other Saturday we have hour-and-a-half long webinars, plus we do individual phone calls or these Zoom chats with each other. So trademastery.com/action. Okay, now let's get into your guys' charts. I love that EXTR chart. That one's good. I'd hit that. That's tradable. The two things, well, more than two things, but two of the most important things you'll understand for whether trade worthiness. Number one is range. The most important criteria of successful trading is, does it have a big frickin' range? If the range is compressed, your risk reward numbers are no good. Make sure that you got a big range with big upside, as evidenced by how to say, on any trading chart, the most important part of the chart. You have my word. This is very valuable. I'm the real deal. I'm not one of these bullshitters out there. I'm the real deal. Let's see. On any stock or ETF chart, that is 10 times more important, 100 times more important than any of that shit. Okay? Professional traders don't even use charts much. They use metrics. That may come as a surprise to you, but trading is all about the math and the trade management, position sizing, sequences of trades, martingaling in, the numbers, and trade worthiness of the chart. So the right side of the chart is 100 times more important than the range is much more important to qualify whether or not someone's trading than the left side of the chart with all the price action. What happened before is before. What counts is what happens on the right side of the chart. And range is the most important tool that we have to determine trade worthiness. Ask any market maker, ask any quant, ask any Wall Street trader, ask any discretionary trader that's been successful. They'll all say, well, yeah, range is it. It's all about ranges. Now, trend and classic patterns like your cups and 45-degree angle breakouts are really good. Be sure to learn from my colleague, Harry Boxer. Harry's brilliant. He's freaking brilliant. He's the other guy who I trust for breakout training. He knows the shit. I haven't talked with Harry in a while. And if you're out there, I apologize. I've been health issues, but Harry Boxer at the Tech Trader, thetechtrader.com. He's the other guy I'd recommend. His book, Profitable Day in Swing Trading. Be sure to get a copy if you can. The only other books I recommend are Steve Nissen's Beyond Candlesticks, Van Tharp's Trading Matrix, and Tony Oz's The Stock Trader. And maybe Mark Douglas's The Disciplined Trader if you need help with that. I'll give you discipline. What is your major malfunction, numbnuts? Don't you have a Full Metal Jacket, baby. Anyway, range is acceptable on this, but it's a shit chart. So by that, I mean, I don't have an edge in this. The reason is it's the middle of previous range. Anything that's in the middle of a range, think it's a doji. It is confused. It is uncertain. The traders, they've been buying this, but we're at a pivot. We're at a 50% range. So within the most recent range. So eyeballing it, that's a no. So that's RXDX. You're fired. Actually, I should make a different sound. Okay, RXDX, no. But thanks for your suggestions. It's nothing personal. I mean, if your charts suck, it doesn't mean you suck. It means the chart's no good. Let's see. What else we got here? LVS. Have I ever seen a worse chart in my life? That sucks. Day trading, fine. Swing trading, boom. Cisco. Wow, that really sucks. It's in the middle of a range. Yeah, it's been going up. It's got a bullish engulfing, but you don't have edge when things are in the middle and they've already been going, and you're too late to the party, Sparky. If you bought the bullish engulfing high at 41, good. I'd be selling up here at the 45.6 or tying in a trailing stop. When things are in the middle of ranges, you don't trade. You have no edge. Just like you shouldn't be trading on flat days or doji days, right? Exxon. Okay, that'll play. That's good. Gold star for you. That's worth trading because this punk's been going up. It's in a tight channel. It's up at a new high, 45-degree angle. I love that chart. That's good. Check that one. So we got EXTR and XOM. Schwab. I like the recent momentum, but I don't like the price action. It's not a story of consistent accumulation. It feels like this is more an outlier exception to how this thing behaves. Again, I used to be a statistician for the Ford Motor Company. I've got 2 degrees, UCLA, Cal State Long Beach. I'm a genius at IQ, and I'm an expert at data sets and trading. That's okay. I do it maybe a B minus, so it's barely, but it's good because of the volatility. So it's above resistance. What I don't like though is the sine waves, the ping pong. It's not a story of consistent institutional accumulation. So small share size, but proceed with caution. That's acceptable. XLE, that's okay. It's good, even though we got a couple of red days. It's in a 45-degree angle breakout above resistance. Maybe that one a B. That's acceptable. That's worth trading. STLA. Wow, that sucks. Okay. Hood. Robinhood. Wow, that really bites. Why would you trade this? What in God's green earth do you see in that chart that says you want to trade that? Oh, it's going up. Well, yes, Sparky, but that's a better chart. Southwest in the middle of a range. So Robinhood, boom, you're fired. Southwest really sucks. AAC. If you're brand new to trading and you need something that only has 10 cents a range, maybe, but risk reward's no good. There's no reward in that chart. You could sit on it for 3 months and get 10 cents. I don't know about you, but 10 cents in 3 months, a little bit slow, so you're fired. RTX. I like the volatility. Not for swing trading, but for day trading. IBM. IBM really sucks too. Again, guys, stuff that's been going down and choppy, and it's all not good. We want things with really exceptional runs. Let's take a look at a few others. Let's see if there's any bottom fishing candidates. Now, bottom fishing candidates, what you want is something that has a really big range that all of a sudden is starting to spike up. So Bed Bath & Beyond, whenever the memesters, your WSBers feel like getting in this thing over 6, okay. But in the meantime, it may go down to $1 or $2. So I don't want Bed Bath until it gets over 6. ET's not too good. Shopify. One of my traders mentioned Shopify, I think it was Thursday. That one's actually okay for recovery. It's starting to bounce here. Not a great chart, but an okay chart. Plug is actually okay for a pivot because we've got a couple of recent hammers and the upside range is good. So does everyone see the tradable range? As a rule of thumb, you want, how to say, 2 to 1 range is good on a 90-day chart. So if it had been $40 and it's down to 20 and starting to bounce, that's good. If it had been like 25 and went down to 20, that's not good. So if it's a 2x range, which this is, right, 32 down to 16, for that reason alone, and good recent range down, everybody's been selling this thing. It could end up down at $1 or $2 for all we know. But I would play a bounce over, say, the 18 or so if it recovers 17.50, 18. So that's okay because the range. Peloton, too choppy, not enough range. NEO. It's so strongly sold off. It's got the classic sell. This would be a short under 8, right? This again, not a trade recommendation, but this would be a short under 8. And I don't see enough evidence of buying interest in this to make it worthy for a pivot. Disney sucks. Not the company, but the stock price where it's at. MAXR, not good enough. PayPal, that really sucks. TBT, it had been a nice run earlier. That's still worth trading because of how clean the trading range is. So on a recovery over 36, that one's still good. Twitter's great, yeah. I like Twitter too. So do you see how we sort through our list and come up with a manageable list of under a dozen or so? See, Citi sucks. AT&T. Wow, that's terrible. Buyers, but not enough range, and it's a weak buy. Marathon's terrible. Okay, so now that we've got our list, 3, 6, 9, 10. So we whittled the list down from maybe 30 down to 10. Okay, I got more. I don't use Fibonacci. I just use the 50. Let me know if any last ones here. Yeah, I still like GDXU over 3. But do you all start to see the way that you intelligently start with a field of candidates and then you whittle it down to just the best? And then, for example, when I scan through that, what I do is I take out charts that are too expensive. I mean, for me, I mean, yeah, you could trade small shares of expensive stocks, but I prefer things that have both the chart pattern and the volatility in the range at a smaller price. I like things usually between 10 and 30 a share. That's my playground's 10 to 30 a share. That's what I specialize in. I don't like $100 stocks. I don't like $2 stocks. So with that in mind, let's see if we can make some further adjustments to this list. Twitter price isn't too bad. It's 50. It's acceptable. TBT is acceptable. Plug, it's a lot of selling lately, so you're fired. Shopify, it's not too compelling, so I'm going to delete that. Bed Bath & Beyond, another. If it wakes up, buy later, we'll delete that. That's a down chart, we'll delete that. That one's good, we'll leave that. Exxon's too expensive. It's a great chart, but I don't trade $100 stocks, so I'll delete that. Schwab's not strong enough and it's expensive. XLE is okay, but expensive. So now I've got a list of 3. Do you see how intelligent that is? Keep it on these. So you guys asked me about this big ass list of stuff. I narrowed it down to 3. Again, because time is limited. We don't have time. Kind of say, I used to trade all over the place. I'd be in 15, 18, 20, 35 instruments. That doesn't work because you're too scattered. You got to focus. It's my favorite word in the English language. My 2 favorite words are focus and action. So we focus now on Twitter. I thought it was funny Elon fired the executives. Good. TBT and EXTR. Those are prime charts. Now let's see what else you guys have here. Oh wow, a lot of them. I will stick around for you guys. Some oil service. Thanks. John's telling me Twitter's now a private company. Is that true? So there's no more Twitter stock? Is it all private now? Is that true? Somebody let me know. Roderick's saying yes. Well, boohoo, we can't trade Twitter anymore? What the fuck? I mean, yeah, James saying yes. Okay, I should have known that. Okay, or maybe I should know that. I didn't know that. I know that Musk bought it. I would have assumed he would have kept it public. So, oh well, so no Twitter for us. Boohoo, okay. So that leaves us with a couple. Let's take a, Thursday was the last day. Okay, thanks. I'm gonna miss trading Twitter, right? I traded Twitter, Snap, and Meta. Let's see. KHC, I got KHC. All right, any others that I missed? Let's wrap up with those because we could be here all day, but hopefully that gives you a sense of how to be selective and cautious and have high standards. Again, choppy charts, they're just frustrating. You want charts where you got an edge. Oh, by the way, I'm going to add to the list. Now let's take a look at those charts. Pot stocks were a little hot yesterday, the previous week. And we'll look at the solars. I think we looked around, that wasn't too good. Okay, KHC. I like the uptick. I like the strength. What's one of the rules that we would run into here that would cause us to not trade it right now? What's one of my inviolable, most popular rules that I do so well with, that because it's so honest that it works very often? What rule is governing, deciding whether or not to pull the trigger on KHC? In other words, would we buy it up here? Right, Wrestling got it right. Mira, yeah, of course, Mira. Hey, Mira. Tony got it right. Bryce got it right. Heidi got it right. Yeah, so you guys got it right. So this is a really good example of what do we do with this. We don't buy it here. We tighten up a trailing stop at 38 or something if you're in. This would be a good chart if it gets over, say, 40.5 or 40.3, somewhere over the 40. somewhere over the rainbow. Bum, 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 ba-da-dum, bum, 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 bum. So we never buy nines. And you can see, by the way, that worked earlier. What did they do? They sold 39. Boom. It had been going up on the left side there. Thou shalt not buy nines. Thou shalt be a stupid trader if thou buy nines. So don't be that. Be a smart trader, like me. Shooting star, right? At the 39. Be sure to learn candlesticks exclusively from my colleague, the world's top candlestick expert, Steve Nissen, at candlecharts.com. Do not learn candlesticks from morons who read Steve's books and are pretending to be experts. That would be an epic fail. Learn from the genuine expert, Steve Nissen, and his team with Paul and the rest of the gang over at www.candlecharts.com. I've worked with Steve for over 20 years. He's brilliant. I use this stuff daily in my own trades, and it works. It's very good training. Risk reward evaluation, beyond the patterns, how to put that in context of the Japanese candlestick patterns, Western technicals, and risk management is Nissen Triad. Learn from Steve. Anyway, I did, and it worked. So anyway, shooting star at the 39. So that confirms, what I say, east and west. So you don't buy nines. Never buy nines. Proof, right? I mean, I just pulled this up for the first time and just visually saw that. When you own the patterns, when you own the knowledge of a good professional swing trading approach, like I know, and a good professional day trading approach, which I specialize in, you understand the difference between what's worth trading and not. So worth trading, yes, if it gets 40. Okay, what else do we have? Let's blaze through these quickly. NOV. It's actually a good chart if it breaks 23, 24, so 23 and a half, 24. GDXU, that's still thinking around here. I'd wait for it to get back over 5. I've been trying to trade it in and out, mostly just taking small stops, so not been a story of wonder for me. NOC, expensive as F, but a good chart. That one I would trade if I traded $500 charts. It's got a really good story of, this is what I call, when I speak for Money Show, which I hope to do in person again at some point in time, this is what I call an acceleration wrap, where you got like a 30-degree angle that hockey sticks in a 45-degree. And I know my colleague, Harry Boxer, also likes 45-degree angles. And as well he should. He's really smart. I like Harry. I like him as a person too. He's a good guy. Anyway, acceleration ramp, slow, steady ass move that then hockey sticks to 45. You don't want to buy 90, those are weak. They pull back, mean reversion. At 45, you're good to go. So over the 560, I don't trade $500 stocks. If I did, I would buy that one. That's good. British Petroleum, that sucks. Apache, that's okay, but mostly sucks. Labu, one of our ETFs, that sucks. KOS, that really sucks. Canopy and Tilray, nah, they're back to life, but I'd wait for them to take out 90-day highs. Nah. Maybe for a bounce. On the fence with that. Okay, so now we've narrowed it down to 5. And in less than a half an hour, that's kind of like the process that you want to take as an active trader, is really isolating the strongest of the charts with the best patterns. I think EXTR gets my vote for that gets my vote for the best chart of the day. So whoever mentioned EXTR, Johnny, tell them what they won. You get my thanks for best chart. That's the best swing trading chart out there that I can see. So, and that's how does that make sense? It's kind of a funneling approach. You start off with a lot of crap and you sort through it and you mix down till you get an actionable list of short, under, say 5, 6, 7 charts are worth a look. So that William said, I want to trade Biden. You and me both. I like that. That's funny. Where's Trader says he wants to trade Biden. Have we ever had a worse president or a worse White House? If you're a fan of Biden, I won't say anything bad. You certainly have that right. Anyway, I wish we could add someone like Colin Powell, or somebody who's a real leader. Back when we used to have real presidents. I digress. Anyway, don't get me started about Washington. Let's hire thousands of new IRS people and let's make everybody buy electric vehicles because that's Don't get me, and let's raise everyone's taxes to pay for all this crap. Hopefully we get a red wave coming up in a week or two. I think we will, and that will hopefully put the leash on runaway dumbass presidency, and we can hopefully get back to more sensible small government, small taxes, not try and be a nanny state, secure our borders, strengthen our international position, bring back oil where it belongs here in America. All these kind of things I'm a huge fan of, and I apologize if you're, well, I don't apologize, I should say kiss my, if you disagree and you're strongly Democratic and you like all that woke stuff and all that, bye-bye, not welcome around here. But if you're a sensible, intelligent person, that's good. Anyway, no politics, I've been told I shouldn't talk politics, but fuck it, I am who I am. I'm very honest, I'm very direct, I'm not politically correct. I'm the last guy to be politically correct. I'm honest and I'm accurate. Anyway, the point is, that kind of chart's good. My point, lesson learned, do you see how we scan and all this stuff that's things that look interesting, and then you kind of whittle, the goal is to whittle it down into a short list that's easy to frickin' trade. So you don't have 20 stocks or ETFs to follow, you got 5, 6, 7. And that's exactly the approach I take in my live room. Every single day, at the end of the day, we go through a handful of charts, and that's my coaching. That's popular too, this is good. I'm limiting it to only 35, and I've already got, I won't give you the number, but I've got a handful of people already in. So coaching program deadline, still got a few weeks. Take a look at trademastery.com action. And for the live room, just $100 for the month, 97, no subscription. It ends at the end of November, and money back guarantee even. So if you don't like it, it's risk free. I'll give you money back. I don't care. I got lots of money, so I'll still eat steak. I got the first steak I'd had in years from Longhorn, Outlaw Ribeye. I really like ribeye steak. I don't know if anyone else shares my passion for ribeye steak, but they taste great here in Colorado because it's fresh. It's from right up the road. Anyway, trademastery.com/gold ticket. And that's the $97 offer. And I would expect a lot of you to try it out. I do both swing and day trades, mostly day trades, but at the end of each day at 4 o'clock Eastern, now that we have the day's data and the pattern locked in, then we look for swing trade entries, which I often do right after the bell in front of people. So from 4 till 4:15 or so, we cover swing trades every single day in the live room, usually for stocks and ETFs between $10 and $40 a share. And then, of course, we have day trades with specific alerts given to you ahead of time before the bell, starting at 8:30 in the morning, Monday through Friday. So good stuff. New York strip is good. Ribeye is the best. Ribeye is great. Gold by 25. No gold yet. Yeah, ribeye is great, isn't it? I used to like, wasn't top sirloin, but the other one, filet mignon or whatever, but ribeye is the best, yeah. Especially with mashed potatoes and asparagus, maybe a glass of port, some cheesecake, and then some exercise. Just trying to work it off, but highly recommend Longhorn Steakhouse's fabulous Outlaw Ribeye Steak. Film at 11. All right, I think that's going to wrap us up. Thank you so much for being here. I appreciate it. I stayed around a bit late for you guys today because a lot of good questions and a lot of good charts to pull up. So I hope that helps, you know. These Saturday events give you and I a chance to get to know each other better, and hopefully I can be of service to you and help you both for free with these Saturday events. And if you decide to join me in the live room, that would be great. It's relatively inexpensive for all the quality training and the success rate of the alerts I post. So hope I can be of service. Anyway, I'm going to wrap up. You guys take care. Have a pleasant weekend. Stay safe. And let's go get them. I'll see you guys in the room next week. Take care. Best wishes for success in your trades. And let's do the right thing. Again, it's at trademastery.com/gold ticket. And money back guaranteed, only $97 for a whole month worth of live, dozens of hours of training with me. I think that's a bargain. So hundreds agree. So anyway, see you guys there. Take care, and I'll see you next week. Bye for now. Trade smart. See you in the room.